Alright everyone, so welcome to another daily bias model. So I will be using IRL to ERL for this specific model. Now some of it is a combination of Sir Pickle stuff. He is amazing when it comes to this. I will link a video and playlist down below. Now with that being said, let's start with the requirements. So does this require kill zones? Yes, it does actually. It requires kill zones, but you can trade without kill zones, but you have to make sure you back test it. Okay, next, you can take up to 2 trades max per asset or pair. Okay, try not to do more than 1 trade, even if one of them is a win or if it's a loss. Next, does this require a break-even system? No, it does not require a break-even system, but try not to go above 2R if possible. So there are times when you can, but you have to make sure you're reading market conditions appropriately. Next, don't trade during these news events. You can trade during news, just not during these specific ones. Can other models be used? Yes, you can use something like Pitchfork, the daily open, the 12-hour time frame and up, and model 1B and model 2B. Can other trading strategies be used with this? Yes, all current scalping / intraday trading strategies can be used, as well as supply and demand and any future strategies that I make. Now lastly, this can work on any time frame, even the 5-minute and lower, but you must use stronger confluences on the lower time frame. For example, something like unicorn models, 1 or 2 inverted fair value gaps, changes in delivery, candlestick patterns, etc. I will link a video for all my different entry types that I use, so definitely check that out. Now this does trade really well with futures and indices, but mainly futures. And when it comes to indices, try to stick to maybe US 30, master US 30. For me, that's personally been the best, but it's up to you. And it also works on Forex and Bitcoin. I haven't really tried any other assets, but you can, and let me know in the comment section what assets in terms of crypto assets you have seen it work best. And yes, Sir Pickle does have an amazing trading strategy using IRL to ERL, so I highly suggest you check it out in the description below. So with that being said, let's begin with the model itself. Okay, so when it comes to trading IRL to ERL, I'm going to be using Sir Pickle's way of doing this. Now this is just to the best of my abilities and from what I've understood the way he does it. First things first, if there are no fair value gaps or no clear trend direction on the higher time frame like the daily or the weekly, then don't trade that specific asset. Now, one thing you have to know is that when looking for internal resting liquidity, he looks more for specifically like something more like fair value gaps, right? So just keep an eye out for fair value gaps on the higher time frame. Now, why is this higher time frame important? So when talking about the higher time frame, he's using the daily or the weekly. Either one works for him. I prefer to just use the daily, which is what I'm going to use here. Now, this is just to say where overall, right? Overall, higher context, where price is looking forward to look at in terms of liquidity and where it's going to go in the long term, right? So in the long term, we know that it's bullish, right? In the long term, we know that it wants to make more highs. But for now, price is doing what? A small retracement into internal resting liquidity to go back overall in the higher draws of liquidity. So right now, price is retracing here, taps into this fair value gap. Now, once I know, okay, price is overall trying to go higher for this specific asset, what I'm going to do is I'm going to wait for price to come into a form of internal resting liquidity, which is a fair value gap. And then from there, once it reaches it, I want to see price shift to the upside. Now, what I've noticed he does is he'll drop to like a 4-hour time frame, right? And he'll look for something called an impulse shift, which is, from what I understand, just an earlier confirmation of a change in the trend, as opposed to waiting on like the daily time frame, right? So he would go somewhere over here and say, okay, I'm going into the 4-hour and I'm going to wait for that change in trend on the lower time frame, right? So what he'll do is look for something like this. Okay, we got a shift to the upside. We have 3 candles here. Now what we'll do is drop down to the 15-minute, and just for this example, I'm not going to use kill zones because I want to make this like as quick as possible. But if the price happens to align with it, then great. So we're just gonna look for something that says, hey, I'm ready to go back up. We're gonna look for buys, obviously, because we already know price is going from internal resting liquidity to external resting liquidity. So we have price coming down a little bit. Okay, so right here, price tapped into this order block. And yes, this is all in hindsight, but I'm only trying to do it in hindsight because I want to illustrate or show what I'm trying to talk about here. And you can use whatever trading strategy you want with this. So as you can see here, price tapped into this order block, went to external range of liquidity on the 15-minute time frame. And what did price do? Take profit up here, and it took out this external range of liquidity on the 15-minute time frame. Right now, that's how he usually does this. Obviously, he looks for like a unicorn model, but you can use whatever you want. But what I like to do, and this is just me personally, my preference is, if I'm on the daily and I want to confirm that change in trend, I would much rather wait for at least one candle to reject off of the daily for value gap, right? Like this right here. Then I will either drop down to the 4-hour if I need to, or I will just drop down straight to the 15-minute. And either way, I'm still gonna get the same result, right? And almost same entry. So I'll just wait for the same entry, right? Candlestick rejection off that order block, bam, TP, right? And look at that, basically a 2R. So I don't complicate it. I try not to. You can do it how he does it. It's up to you. But this is just the way I prefer to do IRL to ERL when it comes to using Sir Pickle's method. Okay, so with that being said, let me move on to another type of IRL to ERL variation. Okay, so for this next example, I'll be using GBP USD, and this is more of an ICT kind of method, and I'll actually show you the video of where I got this from.
Okay, folks. Essentials to market structure, and this module is going to be really based upon the premise of looking towards helping you educate yourself in determining trade direction. It's my goal, obviously, to share further amplification on some of the concepts that I use in determining trade direction, and hopefully this will be insightful for you. But what do we do when we sit down in front of the charts? What's the primary function as a trader? You, as a Forex trader, you want to be finding your way through price. And as a new trader, I can understand how daunting this task may be because there's so many different time frames. You have your monthly, weekly, daily, 4-hour, 1-hour, 15-minute chart, 5-minute chart, 1-minute chart. You have tick charts. All these different time frames. It's very bewildering sometimes if you don't understand really what it is that you need to be doing and breaking down price in a uniform, structured way. So for short-term trades, you'll be using the 4-hour chart for your trade premise or your directional bias. And then on the 1-hour chart, that would be your trade management or mid-level time frame. And then your 15-minute chart would be utilized for your timing for entry and possibly looking for early reversal signs that your trade may be petering out and it's time to take profits. For day trades, obviously, you can see it's the 1-hour chart. It'd be your highest time frame. You would be managing your trade on the 15-minute time frame, and your 5-minute chart would be utilized to enter. Now, it's not to say that you can't use a 5-minute chart on the short-term swing and position trades for entry, okay? I'm giving you the framework for at least having 3 time frames across the spectrum of your trading. And how you break down market structure over these 3 specific time frames for each individual trading model will give you the building blocks to flesh out what you need to see in terms of directional bias, okay?
So now that you saw that part of the video, real quick, I'm going to show you how you can go from IRL to ERL, and it's basically the same way as I showed you earlier. All we're going to do is mark up our charts real quick just to have a better understanding of where the market is trying to go overall. So here we have a breakup structure. Here we have another breakup structure, and what else can you notice is price already went from IRL to ERL. Here there was a failure to change in trend, and price is going what? From ERL to IRL, right? So now we have to go from IRL to ERL. So this is our next target, right? So now that we know we're bullish, we can mark up this for value gap, okay? And you can wait for the change in trend on the 4-hour, or you can drop down to the 1-hour and wait for that change in trend there too. So you're gonna see something like a change in state of delivery or a break of structure towards the upside. What I like to do is wait for a closure of the body candle towards the upside, break in structure towards the upside, so that way that's more of a better confirmation for me. So here you can see price finally closed over here, right? Sweeping up all this price. Now from here you can actually drop down to the 15-minute or the 5-minute, but for this example I'll just drop down to the 5-minute, and I want to look for some kind of retracement into an area of discount or a fair value gap or something, just so I can get in for a trade, right? So let's see if I find something. Okay, perfect. This area here, this body, usually I use the entire body with the wicks, but for this example I'm just going to use the body. And as you can see, price already reacted to this order block here in this wick, and then it reacted from this order block here. So what you can do is you can either enter on this candle right here or this candle right here. If you want, we'll just enter from here. Stop loss in the middle of this fair value gap, and I'm gonna go for maybe a 1 to 4, nothing crazy, right? So we'll just let price play out. And I don't want to go any higher because once it reaches that external range liquidity, you risk getting stopped out, or reversing. Price will reverse and then stop you out, right? Bam. We were super close to getting stopped out, but finally take profit was hit. So normally you would want to wait for like a retracement into a fair value gap, but if you want, you could have also dropped down to the 1 minute. And you would have also noticed that price reacted off of this 1 minute fair value gap, right? So if you didn't see anything earlier in the 5 minute time frame, you could have dropped down to the 1 minute, and you would have noticed, okay, price tapped into an order block, and this order block also has a fair value gap, rejected. You could have entered off of here, or you could have waited for another retracement into this fair value gap. You could have entered somewhere over here. Price tapped into the smaller time frame order blocks. You could have entered somewhere over here, but instead I chose to enter here. And what did we end up getting? We finally ended up getting TP. So that's one way to do it, and I'm going to show you one more example. Alright, so for this example, I decided to switch things up. So I'm going to use XRP, and I'm going to use the 1 hour time frame as my overall higher time frame, right? So what do we have here? Price is obviously pretty bullish. We see the breaks of structure towards the upside. So I say we're good to go in terms of looking for more external liquidity to be taken out. Now, what do you do if you have too many fair value gaps or more than one? One thing you could do is draw your fib and just have the 50% on. And if the fair value gap happens to overlap the 50%, choose that one, or choose whatever fair value gap is closest to it. And if you have a defined one that's in an area of discount, choose that one. Now, if you're looking for sells, or if you're in a bearish market, you would want it to be in a premium. But in this case, it's better that it lines up with the 50%. And what do we have here? A fractal high that also overlaps with the fair value gap. So that's great. Really, really good confluence here. Now, when trading things like crypto or assets that aren't necessarily well to trade with when it comes to IRL to ERL, try not to go for a high risk to reward, okay? Now, what can you do here? What I want is for a change in trend or some kind of confirmation that says the trend is going back to external range liquidity, and I would prefer for it to be on the 1 hour, right? Why? Because we're going to use lower time frames, and since we're only using the 1 hour, 4 hour higher time frame context, we want to make sure we're doing this as safely as possible. So what I want is some kind of rejection that says, all right, we're pushing up, and in this case we have a nice strong bullish candle. It actually engulfs the doji, and when you see dojis like this, like flat price like this with barely any body, that means that there was a fight in price, and now the fight is over and the buys took over. So we're going to drop down to the 15-minute time frame, and we're going to look for another change in trend or confirmation for a change in trend to go towards the upside. Now, what do we have here? We actually have two fair value gaps, but instead of marking them up one by one, I'm gonna mark both of them up at the same time, so that way it's a little easier to keep track of. But if I were to go to like a higher time frame, like the 30-minute, this would be one entire fair value gap. So either way, it's perfectly fine. Just mark them up. So what I want is for price to retrace into it and then reject off of it. Okay, price came into it, rejected here, and then had another rejection up here. So now what you can do is drop down to, like, let's say the 1 minute, and it's up to you if you want to target this 15-minute external range liquidity, or if you want, you can also target the 1 hour external range liquidity. It's up to you. But again, since we're trading on lower time frames, and since we're trading on assets that don't work very, very well with IRL to ERL, we want to make sure we don't go for too high of an RR. So what can we see here? Now that we're on the 1 minute, we see price rejecting off of these fair value gaps right here, these 1 minute fair value gaps. And now what I want is for something to say, hey, we're good to go for an entry. So price comes down. Okay, taps into that fair value gap. Perfect. So I was actually going to enter here on this candle, strong engulfing candle, little doji, right? And let's just go here, right here, stop loss under that fair value gap. And you know what, I'm gonna go for a 1 to 2, nothing crazy. So we should say price play out. All right, awesome. So 1 to 2 here, perfect. Don't want to go too crazy on the RR. And if you do want to go for a higher RR using this type of model, I would recommend slightly to at least move your stop loss to the fair value gap or to break even and take out maybe 90% of your position. And this is the reason why. Price on the lower time frame might actually retrace even more and try to look for more internal resting liquidity before heading back to the upside. So that's why I'm saying if you're trading on pairs or assets that don't work very well with IRL to ERL, you want to make sure you're not going for too high RR, and it's best to use higher time frame entries like the 15-minute if possible, and if you can, align them with your kill zones. So with that being said, guys, I hope you enjoyed this video. If you have any more questions on this type of model, please do let me know. I will do my best to answer. Leave your questions down in the comment section. Join the Discord. Let me know what you're thinking, what your thoughts on how you use this model. And with that being said, guys, God bless, and I will see you all in the next one. Peace.